The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Here's something that is in the news. Obviously, BHP is in the news today, saying that their dividend payout is going to be an 8-year low. A slowing Chinese steel demand drove its first half profits down. Underlying profit fell 23% to 5.1 billion US. Revenue down 8%. Shareholders will receive an interim dividend of 50 US cents fully franked. That's down from 72 cents from the prior period. The dividend is the bare minimum allowed under BHP's shareholder returns policy. Looking ahead, BHP says it is still navigating uncertainty around tariffs and flagged that to investors it expects labour market tightness to impact. But shares are up 12 cents. Luke, what's going on there? What did you think of the update? What did you think of the dividend? Because obviously you'd have a lot of retail clients that are into BHP. BHP and the four banks seem to be the darlings of retail clients, but the share price up.
Yeah, look, it kind of makes a bit of sense to me. I mean, if you go through this result kind of line by line, it's kind of okay. Everything's sort of as expected or there or thereabouts. Cash flow's a little bit weak, and as a result, you know, your dividend per share on that lower end. It's the low part of the mining and commodity cycle at the moment. You've got weak prices. You've got a weak China in terms of, you know, what it's doing from GDP growth perspective more broadly. And you know, we've had inflationary pressures and labour costs go up, and that's been a significant headwind for lots of sectors, and the miners aren't immune to that. So look, for mine, BHP looks like reasonable value here. I think if you rewind, if you're a retail punter out there and you have been kind of buying BHP over the last couple of years on, you know, a dividend yield, I think this is probably more of a lesson for you than anything else, is that dividends aren't a bond payment. There's no requirement to pay you that money. It's actually at the discretion of management, and they're going to allocate capital the best way they see fit, and it's really determined by cash flows. So a little bit of a rule for maybe first-time players, and some learnings there. But I think, look, from here on out, BHP looks pretty good to me. I think if you're playing in that ASX 20 at the moment, you're probably going to underperform the rest of the market. Those valuations all seem pretty stretched to me. And yeah, I think there's better places to play than BHP. But if I'd rather own CBA or BHP, I'd take BHP every day of the week at the moment. Okay, so what are you saying? BHP is a buy at these levels? Yeah, I'd be a buy here. Okay, all right. Mark, there's the old saying, you buy BHP at 40, sell at 50. And that 5-year chart almost seems to reflect that as well.
It does.
What did you think of the result?
Well, obviously, it's not fantastic.
No.
Yeah, when earnings drop.
Yep.
The dividend, though, they've always had a policy, I think, that their policy was that they would increase the dividend every year against the base.
Yep.
There was some structure they put in place, which is what they've gone up to the bare minimum. And it doesn't mean they're legally obligated to do it, as Luke said. But yeah, at the time they did the policy, the dividend was pretty low, you know, versus earnings. So it looked like they had plenty of room. That'd never be a problem.
Yeah.
Anyway, the I think it's just a cyclical, a bit of a low at the moment. I would have said it was a buy before the report because it was on a P of about 10. That'll go up now.
Right.
So, and by the way, of the ASX 20. It's probably the best value in there because most of them are really stretched.
Right. Yeah.
The CBA and so on are absurd.
Yeah.
So BHP, we're showing it returning about 15% a year over the next 5 years, assuming commodity prices stay where they are, which we don't have a collapse. But
right.
They're now, I think, 40% iron, about 20% energy, 20% copper, and then the rest.
And then there was that move into potash, which was going to.
Yeah, I don't know because I don't follow it in detail.
Right.
But they're pretty diversified. They've reorganised the business. You know, it's got. You know, copper's obviously doing very well and will continue to do well. Iron ore prices, a lot of analysts have said that they were going to collapse, and it hasn't happened.
Right.
So it's still over $100 US.
Yep.
Which is good for BHP. And you know, the difference is now it's just a stocking issue in China because they built their stocks up a lot and they're sort of run it down a little bit, and you get a bit of those changes and it affects volume, which goes to profit. I'm going to agree with Luke. I'm going to say it's a buy, but there's not a lot in the market you can buy at the moment.
Right.
And at least BHP It's got a very high return on equity, and it's actually, I think, you're likely to get 14-15% a year over the next 5 years, which is good.
Okay, which is
It's hard to
pretty
get that
good
anywhere else.
Yeah, absolutely. Yep. Okay. All right, BHP a buy from both Luke and Mark following its half yearly today, which is our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.